Imagine a future where every financial transaction is instant, transparent, and trustless. No middlemen, no delays, no hidden fees, just value moving at the speed of the internet. That future is closer than you think, and at the center of this transformation are two giants battling for dominance: ChainLINK and XRP. These are not just cryptocurrencies. They are two fundamentally different visions for the future of global finance, and the stakes couldn't be higher. XRP is laser-focused on transforming the legacy financial system from the inside out. Through its parent company Ripple, it's built partnerships with hundreds of banks, payment providers, and central banks. The goal? To replace SWIFT, the decades-old messaging system that currently handles the majority of international wire transfers. XRP isn't just about decentralization. It's about making the existing infrastructure faster, cheaper, and more efficient. With RippleNet and on-demand liquidity, XRP is already being used by financial institutions to move money across borders in seconds, not days, while cutting costs by up to 60%. But ChainLINK is playing a very different game. Where XRP is trying to optimize the old world, ChainLINK is building the foundation for the new one. At its core, ChainLINK is an oracle network, a bridge between the blockchain and the real world. Blockchains are powerful, but they're blind to outside data. They don't know what the weather is, what the price of oil is, or whether a payment was received. ChainLINK changes that. It allows smart contracts to securely access real-world information, unlocking use cases that were previously impossible. Everything from decentralized insurance to algorithmic trading to supply chain. Automation relies on oracles, and ChainLINK is by far the most adopted solution in that space. So what we have here isn't just a competition between two coins. It's a competition between two visions. One focused on improving the traditional financial system, the other on replacing it entirely with something more open and automated. And while both are trying to solve different problems, they're ultimately converging on the same battlefield: global finance. To understand who might win this race, we need to go even deeper into the tech, the partnerships, the risks, and the economics behind each one. XRP, for instance, boasts blazing fast transaction speeds and minimal fees. It uses a consensus algorithm called the XRP Ledger Consensus Protocol, which allows for high throughput and energy efficiency, far more than Bitcoin or Ethereum. But it also raises concerns. The initial supply of 100 billion XRP was pre-mined, and a large portion remains under Ripple's control. Critics argue that this centralization could be a point of failure or manipulation. Meanwhile, ChainLINK is not without its challenges. It relies on a decentralized network of oracles to feed data into smart contracts. But not all oracles are created equal. Data integrity, latency, and security are constant concerns. ChainLINK addresses these with mechanisms like reputation scoring, data aggregation, and economic incentives. But the complexity of maintaining a truly decentralized oracle system at scale is enormous. Still, ChainLINK continues to dominate in terms of integrations, with hundreds of DeFi protocols, enterprise partnerships like SWIFT, and even collaborations with Google Cloud and the United Nations. Wait, did I just say Swift partnered with ChainLINK? That's right. In 2022, Swift began experimenting with ChainLINK's cross-chain interoperability protocol to facilitate tokenized asset transfers. Think about that for a moment. The same organization, XRP, has tried to disrupt is now working directly with ChainLINK to test new blockchain-based infrastructure. That should tell you just how serious the competition has become. So where does this leave us? On one side, we have XRP, a veteran in the space already integrated with central banks, financial institutions, and real-world money flows. On the other, we have ChainLINK, the invisible backbone of decentralized applications, enabling smart contracts to interact with reality itself. They're coming from different angles, but both are aiming for the same prize: control over the next era of global financial infrastructure. Let's talk about the money, because beneath every idealistic mission and technical innovation lies a very real economic engine. And the incentives behind that engine can tell us everything about where these projects are truly headed. XP, at its core, is designed as a bridge currency. In Ripple's model, instead of one bank converting local currency into US dollars to send abroad, they use XRP as the intermediary. For example, a bank in Mexico could convert pesos into XRP, send it across the globe in seconds, and the recipient bank could instantly convert it into yen, euros, or whatever currency is needed. This dramatically reduces friction, cost, and time. It's elegant in theory. But here's the catch. For that system to function at scale, there must be deep liquidity in XRP across hundreds of currency pairs, globally in real time, and that liquidity doesn't magically appear. Ripple's strategy has been to work with exchanges, incentivize market makers, and develop corridors in regions like Southeast Asia and Latin America. But these corridors are still limited, and much of the XRP liquidity is dominated by speculative trading rather than real transactional volume. The utility is growing, yes, but the path to truly replacing SWIFT is still long and politically complex. And then there's regulation. The elephant in the room. Ripple has been locked in a high-profile legal battle with the U.S. Securities and Exchange Commission since 2020. The SEC alleged that XRP was sold as an unregistered security, leading to lawsuits, delistings, and investor confusion. While Ripple recently secured some legal wins that brought clarity to secondary market sales, the case is far from over. Regulatory uncertainty continues to cast a shadow over XRP's adoption, particularly in the United States, a key market for institutional finance. Now contrast that with ChainLINK. ChainLINK's native token Link powers the Oracle ecosystem. Node operators are paid in Link to fetch and verify data. This creates a direct incentive loop. The more valuable and accurate the data, the more demand for Link. But here's where things get interesting. ChainLINK isn't just focused on data feeds anymore. It's evolving into a full-blown infrastructure layer for tokenized finance, also known as real-world assets, or RWAs, through its cross-chain interoperability protocol. ChainLINK is enabling communication across blockchains and between traditional systems. That means a bank could tokenize a bond on a private blockchain, and ChainLINK could help bridge that asset to Ethereum, Solana, or even a central bank digital currency network. Suddenly, we're not just talking about crypto. We're talking about the tokenization of trillions of dollars in traditional assets, bonds, real estate, commodities, all managed by smart contracts that rely on ChainLINK for price feeds, settlement data, interest rate inputs, and more. And the demand for that is exploding. BlackRock, Citigroup, JP Morgan, they're all investing in tokenization. These are trillion-dollar institutions betting on programmable assets. ChainLINK is positioning itself as the neutral infrastructure that connects all of it, and in doing so, it becomes almost invisible. You may never hear the word ChainLINK on the evening news, but it could be powering the back end of Finance 2.0, quietly, efficiently, and at scale. The economic models of these two tokens couldn't be more different. XRP is largely controlled by Ripple, which periodically sells XRP from its escrow account to fund operations, partnerships, and liquidity efforts. Critics argue this creates consistent sell pressure, while Ripple insists it's necessary to bootstrap utility. On the other hand, Link is issued with a hard cap, and its usage is deeply embedded into the operation of oracles. The ChainLINK team has also introduced staking mechanisms and incentive programs to enhance security and decentralization, while XRP focuses on velocity. Moving money fast, Link focuses on integrity, making sure the data moving through smart contracts is trustworthy. But let's zoom out, because beyond tokenomics and partnerships, there's a bigger picture emerging. This isn't just about crypto adoption, it's about the digitization of everything. The world is transitioning from analog to digital, from paper money to digital cash, from legal contracts to self-executing code. In this new paradigm, we'll need systems that can verify truth, automate trust, and move value across borders instantly. ChainLINK and XRP are each trying to fill that void. In very different ways, XRP wants to be the bridge between old finance and the blockchain era, enabling central banks and commercial banks to do what they already do, only faster and cheaper. ChainLINK wants to rebuild the entire system from scratch, using decentralized data as the foundation for new financial primitives. Neither approach is wrong. In fact, they might even be complementary. But the market docility always reward what S useful. It rewards what S adopted. Ripple continues to expand in Asia, the Middle East, and South America. They're working on central bank digital currency pilots with more than 20 governments. Meanwhile, ChainLINK's integrations keep growing. Its technology is being quietly embedded into major DeFi platforms, enterprise solutions, and traditional financial experiments. When Swift needs blockchain interoperability, it doesn't turn to XRP, it turns to ChainLINK. So, what happens next? In Part 3, we'll explore possible endgames. What if XRP wins? What if ChainLINK dominates? What does the financial world look like in 5, 10, 20 years? And which of these technologies is most likely to still be here? The answers might surprise you. While both ChainLINK and XRP aim to reshape the global financial system, their methods and ecosystems remain fundamentally different. ChainLINK's strength lies in its ability to provide trusted data inputs to decentralized applications. Without accurate, secure oracles, smart contracts cannot reach their full potential. And ChainLINK continues to dominate this space by offering an incredibly flexible modular network that integrates with virtually any blockchain. Developers are building the future of finance, gaming, insurance, and more, all powered by reliable data feeds and automation protocols that ChainLINK provides. But ChainLINK isn't just about feeding prices into DeFi apps. Its cross-chain interoperability protocol, or CCIP, has the potential to unlock massive value by enabling seamless communication between separate blockchains in a future where assets, identities, and contracts live across multiple networks. CIP could be the invisible layer gluing it all together. Major institutions are already experimenting with it, and if it proves scalable and secure, it could become a foundational layer of Web3 infrastructure. Meanwhile, XRP continues its mission of facilitating fast, low-cost global payments. While newer blockchains often tout faster throughput or lower fees, Ripple's edge comes from real-world partnerships and use cases. Banks and financial institutions don't just need fast tech, they need regulatory compliance, legal clarity, and a reliable track record. RippleNet delivers on this by offering a consistent experience regardless of borders. XRP serves as the bridge asset that enables near-instant liquidity across fiat currencies, a solution that continues to appeal to enterprises aiming to modernize their payment rails. Then there's the legal angle. With the SEC case nearly settled and clarity around XRP's classification improving, Ripple is poised for expansion, particularly in the United States. This regulatory clarity could be a game changer. Many institutions have been hesitant to touch crypto assets with unclear legal status. If Ripple successfully emerges from its legal battle with a green light, XRP could see a renewed wave of adoption in high-value corridors like the US, Mexico remittance market, or pan-European bank transfers. Another important distinction is their tokenomics. ChainLINK has traditionally faced criticism for its token distribution and the way tokens are released into the market. Large amounts of LINK held by the team and ecosystem fund have sometimes caused downward price pressure. However, this is also used to incentivize node operators and fund development vital for a growing infrastructure network. XRP, on the other hand, also faces concerns about centralization, especially since a significant portion of XRP is held in escrow by Ripple Labs. That said, Ripple has steadily released these holdings in a predictable way and has argued that its influence is declining as the ecosystem grows. Decentralization, in both cases, is more nuanced than simply counting how many validators exist. It's about governance, transparency, incentives, and community control. Both projects are evolving on this front, but with different strategies. So where does this leave us? On one side, we have ChainLINK, a modular Oracle network that is quietly powering the most complex and critical smart contract functions. It's not always flashy, but it's essential. As the DeFi and Web3 ecosystems grow, ChainLINK could become the backbone of everything from insurance to gaming to decentralized identity verification. If the world moves toward a more fragmented, multi-chain future, ChainLINK might be the glue that binds it all. On the other, we have XRP, a digital asset born from a desire to improve the legacy financial system, not replace it. It's fast, cheap, and now closer to legal certainty than ever before. XRP could thrive in a world where banks still matter, where governments regulate heavily, and where cross-border payments remain slow and expensive. It may not be the most decentralized project, but it offers an on-ramp for institutions who are NT ready to fully embrace the Wild West of DeFi. Choosing a winner between these two is missing the point. One focuses on decentralized data infrastructure, the other on centralized institutions moving value more efficiently. The real question isn't which one will win, it's whether the future of global finance has room for both. And maybe the answer is yes. Because if ChainLINK becomes the trusted data layer for decentralized systems, and XRP becomes the liquidity layer for moving fiat efficiently across borders, they could complement each other in ways we haven't fully imagined yet. Finance is evolving, and it's not a zero-sum game. So as the world moves closer to a hybrid financial system, part traditional, part decentralized, both ChainLINK and XRP might be the quiet giants powering the pipes behind the scenes. Before we wrap this up, take a moment to really think about the world we're stepping into. We are no longer just observers of finance. We are participants in a transformation, whether it's ChainLINK, XRP, or a yet-to-emerge player. One thing is certain, the future of global finance is being coded block by block in real time. The decisions we make today, the projects we research, the technologies we believe in will shape how money, trust, and power move tomorrow. It's not just about charts and tokens. It's about rewriting the rules of the financial system that has governed the world for centuries. And now, you're part of that rewrite. So if this video opened your eyes or gave you something new to consider, make sure to subscribe to Wealth Unlocked, where we break down the hidden forces of the economy and the future of money every single week. And I want to hear from you. Between ChainLINK and XRP, which one do you believe will power the next era of finance? Drop your answer in the comments with the keyword Future Finance. I'll be reading and replying to as many as I can. Thanks for watching, and remember, this isn't just the age of information, it's the age of opportunity. Stay curious, stay bold.